strong.
The next one is the assessment side of things. So when the bank actually receives your application, they're looking for three main points. The first one is the deposit or the cash or equity. So when we actually first look at your application, we'll look at how much savings you've got available for the new purchase, if that's what you're doing, or whether you're using equity out of another property, and just to make sure that you've actually got enough money to complete when it comes to settlement day. You're given about a day's notice when it comes to the actual solicitor giving you your final statement, and you've got to hand over the rest of that money on that next day, and you don't have time to get it wrong. So that part is really, really important. Secondly is the affordability. So you need to be able to afford the loan from the bank's perspective as well as your own. So when it comes to working out the affordability, the bank will work on a higher interest rate than what you're actually paying. And they will work out your living expenses to a certain degree based on how many people are in the household, and that includes the number of adults and the number of children. So also based in this is your calculations. So you need to make sure that when we work this out that you're actually able to afford the loan, especially if the rates do go up. Okay, the third section that we need to cover is the credit history. So if you've had a default in the past, or you've been bankrupt in the past, or you have a directorship where you're a director of a company, this will all appear in your credit check. And it will also show these days, which it never used to do, it will now give you a credit score. Now your credit score is determined by how quickly you pay off, not so much how quickly, but how well you pay off your loans and your credit cards. So with the new credit reporting that's actually done by the different credit report providers out there, the banks are now actually reporting to them on a monthly basis whether you've paid your loan early, on time or late, and that will report for up to the previous 2 years. So your credit score is based on how well you pay your current liabilities as well as where you've applied for funds in the past. So that part is the other section we need to check, and we can do a credit check for you, which is quite comprehensive through Equifax. It will show your credit score as well as where you've applied for money, so that's not actually it's much more comprehensive than what it is when you apply for your loan yourself, which is the free one. Okay, so the main parts of the assessment are the deposit. Make sure you've got enough deposit or cash to put into the property. You've got the affordability there that's going to work, and then your credit history is also as it needs to be.
Strong.